Let's go ahead and call our meeting to order. Now, we're waiting on one more person for a quorum, but that doesn't mean we can't go ahead and get our meeting started and start reviewing the bill. And okay, we've got some more customers coming in, I believe. Let me ask Representative Buddy Harden if he would to open our meeting with a prayer, if you would. Thank you, Representative Harden. I'll move right into House Bill 239, which is, I think you've all recognized by now, is what we refer to as a department bill. We do need to go over it, though, because there are some substantive changes in the code. I'll begin, if you'll follow along, if you'd like, in Section 1. I think Section 1 is going to be a very helpful change for our banks. What it is doing is tweaking and changing the definition of the statutory capital base. It eliminates the reliance on net assets, the available for sale investment securities that banks hold, like bonds. As you well know, they fluctuate, daily, and that makes it increasingly difficult when you're taking a look at your legal lending limits. This will streamline that by eliminating the reliance on those net assets, the available for sale investment securities such as bonds, and it's a lot easier to regulate and it's a lot easier to execute as banks. That's the change for Section 1. Section 2 is the voluntary dissolution prior to commencement of business. If a group that has filed for a corporate bank charter, if they did not get approved, if that organizing group fails to do what they are asked to do, is to have a voluntary dissolution. If they don't voluntarily dissolve that application, then the department continues to have to report the status on that. This would give the department the authority to move in and make that dissolution on their own. Section 3 deals with the number and term and compensation of directors. A financial institution is to maintain 5 directors. Now, in the current environment, some of that has changed. There's been a great deal of resignations, and that has left, in some cases, some boards with less than 5 directors. What this Section 3 says is that even though there may not be the total of 5 directors, then the remaining directors are still obligated to the institution, say in the instance of agreeing and sign on with a cease and desist order or a consent order. Pretty straightforward. Section 4 deals with credit unions regarding who can serve on the credit committee of a credit union, and it says that no member of the supervisory committee may serve as a member of the credit committee unless, and that language added, unless the board of directors functions as the credit committee. I understand this deals directly with credit unions. Section 5, payable on death accounts. There have been some court cases to where what this language allows is payable on death payees to be also incorporated entities. There's been cases in the past, legal cases, as to where the individual had named an incorporated charity to receive the benefits, and the court ruled that the strict interpretation of the wording of the code did not allow that, so this changes that to allow that. Section 6 deals with making false statements with the intent to defraud a financial institution. I'll give you the anecdote for this. An individual had made a statement to the loan committee, a loan officer, that there was going to be a 10%, the borrower was providing 10% of the cost of the land, and the loan officer knew that that was false when they made that statement. When this individual was prosecuted, it was ruled that the wording of the code did not allow for that prosecution. So this language, it doesn't. There's no concern that I have that it broadens or endangers any director or any bank employee. What it does is it just it solves that issue with some about this particular situation. Section 7 defines mortgage lender as the person who holds mortgage loans. Section 8 clarifies that attorneys that are exempt from a mortgage being called mortgage loan originators or brokers or lenders. However, they still have to be licensed to practice in the state of Georgia. 9 is the requirement for a mortgage loan originator in the instance of mobile homes. Section 10 is just a clerical change. Section 11 is a streamlining effort. What it does, it requires that each mortgage loan originator is covered by the surety bond of his or her sponsored licensed or registered mortgage broker or lender. So that'll be easier to follow for the department. Section 12 simply says that the mortgage loan originator licensing is an existing process as opposed to one that's only prospective in nature. 13 is allows the department to share information with other agencies and law enforcement authorities, suspected people who are moving from place to place, state to state, committing mortgage fraud. Section 14 is just a clerical correction. Section 15 is just a language deletion based on the proposed change earlier about the, I believe that was the requirement on the mobile homes. I believe that's right. No, 032. Oh, the financial requirements for the bond requirements where the mortgage loan originator surety bond is. Section 16 deals with the renewal of licenses and registration, defines proper application, and to provide that no refunds are permissible once a renewable fee has been paid. Say if somebody pulls their application, then they don't get the refund. Section 17 just states that language has been added to clarify that the code section applies to registrants as well as the licensees. Section 18, if an administrative action is initiated against an applicant for a license, this states the department may pursue that action all the way to the conclusion, even if the applicant withdraws. If they suspect that somebody is not worthy of having the license, a lot of times if they feel like apparently if they're about to be exposed, they'll pull the license and could come back again. This would allow the department to continue to investigate this situation. And finally, in Section 19, it's putting a little bit more teeth that says an order issued by the department may be subject to a penalty that should be calculated on a per violation, per day situation unless otherwise agreed to the department. Right now, I think it's just $1,000 for a violation, which is really no penalty at all for a large company. I believe that covers all the sections. Now, I am not aware of any of our organizations, of our lending organizations, that have any problems with this bill. That doesn't mean we have to pass it. I'm just making you aware that I've checked with all the different organizations that represent our lenders in the state, and I'm not aware of any objections to any section of the bill. But I will take questions if there are any. No questions. I didn't hear who said that. Oh, Representative Flood. Okay.
Thank you, Mr. Chairman. And I clearly heard you that there seems to be no opposition to this bill. However, for most of us, this is the first opportunity to have read the bill. What is your intent as to the action to be taken on the bill today?
Oh, my intent is to call a vote on the bill.
Has this been through a subcommittee?
No, it hasn't. I mean, we'll take as much time as you need to look at and ask whatever questions. And I will add that Commissioner Braswell is here, and the department will be happy to answer any questions that you have, or we'll take as long as you need.
Is there anyone going to speak on the bill?
I beg your pardon?
Is there anyone planning to speak on the bill?
No, nobody signed up, but I will, if you would like, I would be happy to ask. Do you have a specific question?
Well, not at the moment. I'm sure I will have some as soon as I have a chance to review this in more detail, but I was just asking in terms of the process, and if there is someone from the Bankers Association or from the department that would like to speak, I'd certainly like to hear their comments on the bill.
I tell you what, let me move on to the other members who may have direct questions, and then we'll, who's next? Okay. What number is that? I'll let you match the numbers. Representative Franklin.
Thank you. If I'm not mistaken, we got the meeting notice for this bill in excess of a week ago. Is that correct?
I believe that's right. I can't tell you exactly when that was.
And the bill's available online and in the clerk's office?
That is true.
Thank you.
But again, let me emphasize, we'll take as much time as we need for each member to feel comfortable. Who's next? Representative Mills.
Thank you, Mr. Chairman. I had a question on page 3 of the bill, line 89. As I read this, it states that you're guilty of a felony if you make any false statement to the financial institution, the commissioner, or the examiner with the intent to injure or defraud the financial institution. And I guess I just want to make sure that that language is willful and intentional, because I know all of us who have commercial loans, and we're asked to fill out forms to re-up ever so often on our loans, and I mean, I know I've gotten in a hurry, and I don't want to be guilty of a felony if I don't include something. I just want to make sure that that language is willful and intentional.
It is my understanding that it is. What I'll do is I'll ask Commissioner Braswell or whoever he would like to speak to the intent section of the bill to make sure that everybody's comfortable that we're not talking about making a mistake in terms of reporting anything and deal with a mortgage or loan application.
And thank you, Mr. Chairman. That is absolutely correct. And also, just want to make sure that everyone on the committee is aware that this is strictly regarding to felonies of directors, officers, agents, and employees of financial institutions. So it's not just if a customer submitted inaccurate personal financial statement, for example. This would be where a loan officer, in the case that the chairman spoke of, it was a case where a loan officer submitted falsified documents to the loan committee, knowing that that customer had not put 10% down. He represented to the loan committee that he would be putting 10% down on this loan. It'd be those type instances. But it definitely would be with the intent to commit fraud, and it is my understanding that that is language that is common in other parts of the statute as well.
May I follow up, Mr. Chairman, with a question?
Absolutely.
Real life example. Let's say I'm filling out my assets form to renegotiate my loan or to make sure my loan stays in place, and let's say I had stock that was worth $30,000 last year, and I didn't look at it, and I just said, well, it's worth about $30,000, and I wrote down $30,000, but it's only worth $15,000. Under this language, will I be guilty at that point if I put 30 instead of 15?
Well, again, this does not even pertain to a customer.
Right, I understand it's talking about directors, officers, agents, and commission. I'm just similar thing for a director. If a director had to write down assets or
not unless you did that with the intent to defraud the institution, with a willful intent to defraud the institution. Because it says with intent to injure or defraud the financial institution.
I think intent being the key word. I mean, not being a lawyer, but I mean that's that's the hurdle.
And of course,
that any prosecutor has to prove that there was intent, which I understand is really the. I mean, without.
And of course, we looked at it. We had our senior counsel look at that as well as I understand outside counsel looked at that and did not have an objection to that language.
Thank you, Commissioner. Do you have anything else for the Commissioner?
Thank you. I was just going to, not that I tend to err on the side of caution on some of these words. And would you have a problem, or would you be opposed on line 90 where it says with willful and intentional language like that? That would, I just like that willful language.
Word willful, adding right before the word intent.
It raises the bar a little bit and erases a mistake that I mean, the intent is to catch a crook. It's not to catch somebody who, in error, filled out a form wrong. And I just want to make sure that's what we're doing.
Do we have? I don't know that we would have any objection to that. I don't know. Like I say, I'm not a lawyer, so I don't know if that raises the bar regarding the ability to prosecute someone in the circumstance that I spoke of earlier. It may be more difficult, or may not be any change at all. I don't know.
I wouldn't want it to preclude catching the bad person. That would not accomplish what we're trying to do. So I just throw that out for discussion. And, Mr. Chairman, I don't want to hold up the bill in any way at all. I just want to make sure that we don't make a felony out of somebody who, like myself, might not always.
Well, I think we all feel that way, particularly in the environment we're in now. I mean, there's a lot of things going on in the lending community, and I don't disagree with what you're saying. I do think you make a good point that whoever made it, that I don't know that willful changes. It sounds better, not being an attorney, and unfortunately our committee attorney had a conflict, and so he's not here to give us advice on that. I'm wondering if, and we don't like to make substantive change necessarily in rules, but would.
Mr. Chairman, I'm fine with moving it forward like it is.
And then we could.
And maybe if we needed to amend it, we could do it on the floor if that is the will of the committee and you as the chair, or we can leave it like it is. I just have an abundance of caution. I know how values have dropped. If somebody asked me how much this piece of value, this property was worth, and I put $2 million, and now it's only worth. I just don't want that person to get caught in reporting those forms as a director or officer, or, and I don't think that's what y'all want.
What, do we have any, does the department have any legal opinion on the word willful in this case that Mike could,
Willful does not change the standard, and so we would not have an objection from a legal perspective to including the word willful in front of intent, willful intent. Making a false statement is willful.
so adding, we're not going to add any protection by adding willful, is what you're saying.
Right. But if it makes it.
Well, that you know,
She answered our question.
she answered the question. I think that's, we're looking for legal terminology, not, okay.
We will be reviewing
Okay.
the documents, though. No.
Okay, all right. I think Representative Frazier was next, I believe. Representative Frazier?
Yeah, thank you, Mr. Chairman. I do see the Credit Union Association in the audience, and I would just like to know what the effect this bill has on our credit unions, an intent or positive or negative. I just need to know, because, you know,
Well, let's wait until, you know, I'd rather let's, if we're going to, you know, let's, don't get out into the audience necessarily. I'll give anybody from the credit union a chance to, if you want to come up and identify yourself so everybody know who we're talking to that hadn't met you, whichever anybody wants to come. Would you? Okay. Yeah, that's fine. You're right now. That's okay. And I believe the question, Ms. Frazier, was anything in this bill, in any section, how it affects credit unions?
Right.
That's your question.
Correct.
Thank you.
Okay, thank you.
Thank you, Mr. Chairman, members of the committee. My name is Mike Culbertson. I'm the Chief Advocacy Officer of the league itself, that's the Trade Association for the Credit Unions of the State of Georgia. We are in support of this bill. We've had ample time to talk with the department about the different areas that affect it. The only direct effect it has is on page 3, where it talks about the credit committee, and this applies to credit unions who really have kind of a small contingent of volunteers, and many times those volunteers serve in multiple capacities, so that really is a help for a lot of our credit unions. The other areas of the bill are quite fine and really don't negatively affect credit unions at all. So, do you have any questions?
Thank you, Representative Frazier. Thank you.
Thank you.
Thank you. Who's next? Is that Representative Williamson? Yeah, okay, 27. Okay.
Thank you, Mr. Chairman. I just want to thank Representative Mills for his suggesting that line 90 include the word willful, because even though it's semantics, I do think that it would put emphasis to the fact that it would be willful intent, because as a point of clarification, any false statement in line 89 would include oral or written, I'm assuming. If the legal counsel could maybe confirm that interpretation that I'm making, which could, frankly, when you're dealing with regulators that are coming in on exams that might last several weeks, a statement could be a quick question in the elevator or just in a hallway. Oh, by the way, I would like to ask you a quick question. And you just want to raise the standard as much as possible that oral on the fly statement is a willful intention to defraud. So I guess my just a confirmation is then any false statement would be just any oral or written statement.
Introduce myself before. I'm
Okay.
Judy Newberry. I'm the Deputy Commissioner for Legal at the Banking Department. And you're correct that that any false statement, but the intent to defraud does in fact have to be there. So it could be oral, it could be written. Does that answer your question?
It does, but as the chairman's pointed out, these are unique times, and it seems from many lenders and many bankers' perspective that rules are getting reinterpreted, and as one Sage pointed out, the goal line seems to move back and forth as the game progresses. And I'm not making light of it. It's not a game. It's very serious. But we just want to make sure that that everybody understands it would have to be clear, willful intent, and not just an offhand remark, which have in fact remarks have been used in exit exams to frankly berate boards and executive management with some vigor in some institutions. And I'm not saying this came from the state banking departments necessarily, but from the regulating community in general. So
maybe if we went back to, let me add this, I mean, it was already illegal. It was already a felony to do what this section says. I mean, if you make a statement or do anything with the intent to defraud for personal gain, was already a felony. And maybe we go back through real quickly the changes and the reason why. It's not a new standard.
It violates federal law at this time. And then the judge that heard was hearing an indictment, refused to bring down an indictment because of the specific language in the statute that he said that it was not a, it didn't meet his standard in the reading. It still met my standard in the reading, but it didn't meet his, and so that's why we're trying to tighten it up. And if you think about it, since this is a criminal provision as opposed to a civil violation, then the standard by which someone would have to be adjudged guilty would have to be beyond a reasonable doubt. So it would be the intent to defraud beyond a reasonable doubt. So that also raises the bar. And I don't think that running into somebody in an elevator and asking them off the cuff, what's the capital base today, and them responding and that being incorrect, that could be in any way interpreted to violate this code section.
So it's fair to say that even without this language, if a person did what this individual did that we used anecdotally, another judge may find that standard sufficient.
Right.
Anyway, they were dealing with one judge that had one opinion, and this language addresses what that judge said. Trust me, if I felt like, if I had any doubt, I'm a director, that I was putting myself in there, I wouldn't put myself in this position. I don't think representatives of the lending industry that I talk to definitely wouldn't want to put their folks. I don't think that's what we have. I will say this: if we do, we'll examine this willful part again, and if we need to add that, if we have a different legal opinion that it strengthens, then I'm certainly in supportive of doing it if it raises the bar some more. I'm not opposed to that.
Well,
we can do that more than one way.
My disclaimer: I'm not an attorney either, and thank you for the clarity that you.
All right, we're blinking here. Good. Okay. Is it? What number is that? It is blinking, and I don't know who was blinking first as I was talking. Okay, that's 23. Representative Teasley.
Yes, just a quick question. In Section 9, line 125, I certainly may have this wrong, but it says August 1st, 2010.
Yeah, that was a little a glitch. Let me see if I can remember how to explain that. I had that. Yeah, that's you did. You caught that. I'm going to characterize this best I can. It may appear to be an error, but the current language provides a licensing date of January the 1st, 2010, and it says or such later date approved by whoever Secretary of HUD. The department extended that deadline to August the 1st, 2010. So all that date's already passed. That is the actual date that they approved. So that's why it says August. That's You did that,
I
but
just
you're
wanna make-
correct.
I just wanna make
You're
sure.
correct. It looks like a clerical error,
Okay.
but it's not. All right, who's next? Representative Sheldon.
Thank you, Mr. Chairman. I have a question about Section 13 and the exchange of information. Could you, I'm sorry, maybe tell me what type of information would be exchanged with the law enforcement authorities?
It's my understanding that what they're looking to do is to provide information that is dealing with people who may be perpetrating fraud or who have perpetrated fraud that they may know. These people travel from state to state. They'll set up shop in one state, and then they're caught. Unless that information is shared, there's a way then they can come to the state of Georgia and perhaps, set up the same shop again. So that information is the investigating information, I believe, that turned up evidence that there was fraud, intent to defraud, to act fraudulently in terms of lending institutions. I think that's,
As you know,
is that close?
last year the SAFE Act was passed that requires mortgage loan originators to be licensed in all 50 states. We have that program up now and running throughout the 50 states, and this is to allow the state law to comply with the federal law, as well as to allow, when we find out we have a fraudster in Georgia, we can notify the other states and let them know, because they may be also licensed in those other states. We can also notify law enforcement authorities, could be law enforcement authorities in another state even.
It's just information relating to fraudulent activity.
Exactly. We're trying to ensure, because right now, or in the past, before the SAFE Act was passed, a fraudster, if he was, say, kicked out of Georgia, would go to a neighboring state or another state and open up shop and do business over there. And Alabama, for instance, would never know that he had been a fraudster here in Georgia.
Can I follow up question?
Yes.
So I guess, so you're saying that if someone's committed fraud, then we proactively send the information out, or what's the bar to have the information, I guess, exchanged between the federal agency or the law authorities?
Well, if we take an administrative action, in other words, revoke that person's license, it automatically goes into the nationwide mortgage licensing system, and all the other states can look and see that XYZ has now had their license revoked in Georgia. If there was other fraudulent activity, we would report that to the law enforcement authorities. If we felt it warranted their interest and was at a level in which they would have an interest in prosecuting or going forward investigating, we would notify law enforcement authorities.
So can you not notify them now if there's fraudulent activity?
Well, we can't. Rod Carnes is our Deputy Commissioner for Mortgage that deals with this on a daily basis. So I'm going to let Rod speak to that.
This is really more with the nationwide mortgage licensing system. And so what would happen is if a loan originator has their license revoked, it is in the system. In other states, they can see that a loan originator in Georgia had their license revoked. Then they may license that individual. They may contact us, want some information about that to see maybe do they need to start an investigation to see if that person is doing similar activity there, or are they going to use the information we have to possibly take administrative action against them because they may also be licensed in their state.
Okay, thank you.
Representative Harden.
Yeah, just a quick note. When you're working with attorneys on whether willful intent works, what about if you look at putting before item 6 there in section 6, knowingly makes any false statement to the financial institution with intent to injure or defraud? Would that give it some more safe haven, if you will, for people that might not have intended to? No, knowingly makes any false statement.
Would knowingly change, not in your
That would, okay,
estimation.
yes.
I tell you what I'll do. Again, I will ask for language, if there is language that's stronger. We'll talk about it. If there's language that's stronger, I don't think anybody's opposed to adding it. Nobody wants to see anybody caught in something that's not intent.
Yeah.
We agree. Ken? Oh, no, that's it. You wave? Is there anybody else? Representative Flood, I think I went a lot longer than I thought we would. Do you have any questions? No, my questions were answered. You clear? Okay, good. No more questions. Well, I'll entertain a motion. At this time. We have a motion and a second. Any further discussion? Did you have anything? 29 was blinking.
Yeah, I was going to make the motion.
Oh, I see. Okay. Oh, thank you. Well, we have a motion and a second. Any further discussion? Those in favor of the motion will signify by saying aye. Aye. Any opposed? No. I believe it's unanimous. The last little bit of business that we have, I want to House Bill 3 by Representative Franklin. Since Mr. Weldon isn't here, I'm going to put that in his committee. And that be all right with you, Mr. Franklin? Financial institutions and services to have a hearing to talk about House Bill 3. Other than that, don't forget our committee dinner is this evening at Nino's. So come on, look forward to seeing you. And if that's nobody has anything else, we're adjourned.